Let me now bring on board Mr. Diwakar Gupta, Managing Director and CFO of India's largest bank, which is State Bank of India. Mr. Gupta, morning. Thank you for joining us. Mr. Gupta, if I look at your numbers, there is good news and there is bad news. Good news is that your net interest margins have expanded to 4%, but net NPAs have also gone up. So what do you want to start with? Good news or bad news?
No, I think the good news is known to everybody, so we can start with the bad news. And our NPAs have grown by about 6,000 crores this quarter, and that is almost as much as the last quarter. Now, all along, we had been expecting that the growth this quarter is going to be significantly lower. But as you have seen, the economy has not really shown signs of a great revival. And we had a one-off account, which was very large. Having said that, I think that 6,000 crores of NPAs, we have provided very, very adequately for them. So as far as the balance sheet goes, I don't think the numbers are, or the balance sheet numbers are under stress. And we also feel that the NPA problem is resolving. We should see much better performance in the coming quarter.
Mr. Gupta, morning. So looking at the bigger picture, can we say that the worst is over for SBI in terms of the NPAs post these third quarter results, and things will only improve, however gradually, if they do?
I think that is a very apt summing up of the situation. I think the worst is really behind us. And not only will the NPA accretion begin to taper off, I've been maintaining all along that 60% of our slippages have been on the corporate side. Many of these are actually going to come back and become standard. So we should see significant improvement in the months that are to follow.
Mr. Gupta, so apart from asset quality, what are the priorities that you're setting out for the bank for the next few quarters? Is it going to be expanding the margins further, focusing on loan growth after fresh capital infusion has happened, etc.?
We have not been constrained for loan growth on account of capital, so our growth projections will continue as they would in a given market situation. Now, as far as priorities for the bank are concerned, I think we are back on trend, and our strategy will really be to retain market share while consolidating.
Right. So, can I archive your statement, Mr. Gupta? And is this a promise to your shareholders that the NPA situation for State Bank of India in coming quarters will only improve?
Yes, certainly. I think we are very, very certain about it. But I think all trends are leading to the conclusion that the worst is over. We have seen the stress that we had to, and things are going to be better.
So apart from Kingfisher Airlines as a specific account, any more accounts which are giving you sleepless nights?
We don't really have very many accounts. Aviation as a sector, is impacted.
What about telecom?
Telecom, we are quite comfortable. Our 2G exposure, I think the figures have been put out officially. Our 2G exposure is very limited. Just about 1,100 crores on the funded side, 3,400 crores on the non-funded side. Non-funded is mainly guarantees for rollout, which is not going to happen since licenses have not been granted. And on the 1,100 crores of funded also, some of it is to large groups, some of it is fully secured through cash collaterals and so on and so forth. We don't expect any stress on the telecom portfolio.
So, Mr. Gupta, I just want to get back to the point that you were making about loan growth, because you've guided for a 16% loan growth for FY12, which is almost coming to a close. Is that going to be maintainable by you? And what about your target for FY13 as well?
Well, I think we should end up very close to 16%. We are trying. The fourth quarter is normally very strong. Agriculture has shown good offtake. SME traditionally does well in the fourth quarter. And I think, therefore, we should be on course to reach very close to where we are if we don't actually achieve it. Now, as far as FY13 is concerned, FY13, our projections, maybe it's a little early to make any projections because we still need cues on how the economy is going to shape up. What kind of policy relief and initiatives are going to come around. I think that will determine the numbers, but certainly it should be in the same range at least.
Right. Mr. Gupta, apart from the recent preferential allotment of 7,900 crore rupees to the government, what is the quantum of capital infusion that SBI expects from the government by March 2012 and in FY13? And do you think you have enough capital to maintain a Tier 1 of about 9%?
We have done several things during the last few months, even to allocate capital more efficiently. And with the 7,900 crores that the government is giving us, I think we should actually be very close to a 9% tier 1 and a 13% overall, even in FY12. Maybe we'll miss it by a few basis points, but we should be closer to that. Now, having said that, therefore, we'll need capital only for growth. And, the numbers for that are also roughly all there. So at the back of palm calculation, if I have to grow 150,000 crores in FY13, I'll need roughly 15,000, 16,000, 17,000 crores of capital. And if my retained earnings are 9,000 or 10,000 crores, I need another 6,000 to be raised. That can be a combination of infusion from the government or raising from the market or both, which is something the government has to take a call on.
And finally, Mr. Gupta, you've just indicated to us that you're confident that you will keep your NPAs under check, but are you also confident that you will be able to keep your NIMs above 4%? Because 4% is the highest I can remember in the history of State Bank of India, at a time when the environment is tough, at a time when the cost of capital is going up, at a time when, corporate capex is slowing down.
No, you are absolutely right. 4% is a very, very healthy NIM, and certainly I think the best that we have ever seen. But it has to be seen in the context of the fact that our base rate still continues to be the lowest in the industry. And therefore, I don't really see a very great pressure on NIMs except for market movement of rates in general. So when rates fall, we know that assets reprice faster than liabilities. There could therefore be a marginal change to the number, but it's not going to be very significant, maybe 10 basis points, 12 basis points. We should be there in the band of 3.5 to 4, if that's a large band, closer towards the upper end.